if you were SEC chair, how would you change things in terms of governance, in terms of providing clarity for not just cryptos, but other asset classes as well? What would change? I'm pleased to welcome to the show Hester Peirce, Commissioner of the U.S. Securities and Exchange Commission. Commissioner Peirce was appointed to the SEC by President Donald Trump and was sworn in 2018. Prior to the SEC, she served in a number of positions in government, including having been the former senior counsel at the U.S. Senate Committee on Banking, Housing, and Urban Affairs. We'll be talking about her outlook on the changing regulatory landscape for cryptos and penny stocks. Welcome to the show, Commissioner Peirce. Honored to host you today. Thank you for being here.
Well, David, thanks for having me. It's great to be here. And I do want to start out with my disclaimer, which is that my views are my own views as a commissioner, not necessarily those of the SEC or my fellow commissioners.
Let's talk about cryptos first before we talk about the broader regulatory landscape that's facing the SEC today. As you're aware, Coinbase has been engaged in an ongoing lawsuit with the SEC. They've asked the agency to clarify when a digital asset is a security and when it is not. Coinbase claims that current regulations are not clear for crypto investors and the crypto sector. In a recent congressional hearing, you said that crypto tokens should not be classified as securities.
I think what's happening is that we're trying to be ambiguous because the legal precision carries with it real implications. And this is why people have been coming to us and saying we need clarity. Is the token itself a security? Or is it part of an investment contract? Is it being sold together with an investment contract? If it is, what is that investment contract and how long does it track along with the token? By using imprecise language, we've been able to sort of suggest that the token itself is a security apart from that investment contract, which has implications for secondary sales. It has implications for who can list it. And I think this is absolutely we've fallen down on our duty as a regulator not to be precise. And so tucking into a footnote that, yes, we admit that now actually the token itself is not a security, that's something that we should have admitted long ago and then started wrestling with the difficult question.
Can you just elaborate on what you mean by that and how you view the space overall?
Yeah, sure. And I think it's important to always give the lawyer's disclaimer, which is that facts and circumstances matter. So you can design a digital token such that it would be a security. You could take a share of stock and you could tokenize it, and that would still be a security. But I think that where we've been spending a lot of our time in recent years has been around token launches where the token is basically the coin of the realm on a blockchain. And so we have treated the coin, the token itself, as being a representative of an investment contract. But what has not been as clear as is what happens when that investment contract, when that token is traded on a secondary market, for example, does the investment contract go with it? And what I've called for is more regulatory and legal clarity around what we're talking about when we're saying that something is being sold as a security.
Well, just to clarify here, so are cryptocurrencies, besides Bitcoin, we can talk about Bitcoin as a separate matter, but are cryptocurrencies currently a classified security or not?
Well, again, they can be. You can design a token so that it is basically a stock or a bond, and that would certainly be one. And you could also sell a token as part of an investment contract, which is where we've spent a lot of our time. The Howey test, probably a lot of your viewers have heard of that. We have looked at a lot of tokens through the Howey lens, in which case it could be something that is sold as part of a securities offering. My view of these has been different than my colleagues. And so, again, I think it's really important for me to make that clear, that I'm speaking for myself as a commissioner, that the commission has taken views that sometimes don't align with mine. But I think you really have to be clear about whether the thing itself is the security or whether you're saying that the thing, the token, is being sold as part of a securities offering.
And for the audience, can you just highlight for us what the Howey test is and how something could pass the Howey test?
Yeah, so the Howey test says that if you have an investment of money in a common enterprise with an expectation of profits based solely on the efforts of others, then you have a securities offering, basically. And so this is a little bit of a catch-all category. So you can look at the past cases. They're kind of interesting in this area where you have someone selling whiskey casks, or looking at the case from which this Howey test came. Orange groves, people were buying interest in orange groves that came along with an agreement that they didn't have to do any of the work. The work would be done to make sure those groves produced, and then they would share in the profits of the orange grove. And so in that instance, you're selling a security. That's a securities offering, right? You're promising someone, just give me the money, sit back, and you'll get a return on your money. I think that this test is not always that helpful in the crypto context.
Bitcoin. How is Bitcoin different from the rest of the altcoin space in this regard?
Well, I mean, you have to look at the facts and circumstances of each, and Bitcoin had a particular type of organic offering that was very different than what some other offerings have been like. So, you have to look at that. I mean, I think the key to remember is that what the SEC is trying to get at is they're trying to get at instances where you have information asymmetry, meaning that the people selling the token have more information than the people buying the token. And so you want to get to a place where the securities laws have often been used to ameliorate information asymmetries. So you want to get to a place where the information flows from the people selling to the people buying. And the securities laws are one way to do that. I've suggested a framework that would, it's a safe harbor, so that it would say at the beginning, you do have information asymmetries, you solve those over time as the network becomes decentralized, at which point nobody has more information than anyone else, everyone's on equal terms. And so then I would say the securities laws don't really need to apply because you don't have an information asymmetry anymore.
I think earlier in the year, and perhaps later into last year as well, the debate as to whether or not Bitcoin should be classified as a security rather, or a commodity, was clarified a bit more. I correct me if I'm wrong, but I believe the SEC leaned towards classifying Bitcoin as a commodity. Can you just elaborate on how this decision or thought process was made?
I think what you're referring to is that we made a decision to finally, after many, many years of people waiting for this, to finally allow exchange traded products based on Bitcoin to trade on our markets. And so one of the conclusions that people drew from that is that the SEC is treating Bitcoin like a commodity and not like a security.
I think a lot of people in the crypto community wanted to ask you and members of the SEC this following question: why did it take so long to finally approve a Bitcoin ETF? What was the process leading up to that decision?
Well, I mean, I had said we should have done this many years ago. I wrote in 2018 that we should have approved one of the applications that came in, and I've been very dissatisfied with the pace at which we operated, and frankly with the process, because I think we applied a different standard for these kinds of products than we have for similar products. Ultimately, the process that got us there was a court telling us that we were acting in a way that was arbitrary and capricious. And so we essentially, I think our hand was a little bit forced to say, okay, we had to approve Bitcoin exchange traded products.
Sorry, what do you mean when you say your hand was forced?
Well, so we got sued, and the court said that our approach to thinking about these products was arbitrary, that it was not consistent with how we should have been thinking about things. And so once the court says that, it's awfully hard to go back to the same reasoning that you were using to deny them and say, well, we're still going to deny them because you have a court that says that we shouldn't have done that. So it's not surprising that we got to a yes.
The common theme that I've been exposed to, at least, is the overregulation of cryptocurrencies following the collapse of FTX. This has been a concern for many people in the crypto industry. How would you respond to the statement or opinion that the SEC overregulated the industry following not just FTX's collapse, it was Celsius and many others, but following that period, there's been, this era of just stringency that some may seem unfair. How would you respond to that?
Well, I think there are a few responses to that. First, I mean, we all know there was a lot of bad conduct, and we still see a lot of bad conduct in the crypto world. And so it's natural that regulators like the SEC want to go and pursue that bad conduct. And at the end of the day, it's Congress that decides which regulator, if any, is right to pursue bad actors in this space. But that certainly drives some of the regulatory activity from this agency and other agencies. Second, I would say some people would actually argue the opposite, that we haven't been devoting enough resources to thinking about how to regulate this industry, and that we ought to actually devote some more resources to thinking about the difficult questions of how does this technology fit within our rule set? Where do we need exemptions from the existing rules? Where are there gaps that Congress might decide to fill? And instead, what we've done is we have taken an approach that is throwing a lot of enforcement resources at the space and sort of trying to work out the difficult issues in the context of enforcement actions. And that is certainly not my preferred method to achieving a good place in the crypto industry. It's not good for people in the industry who are trying to build things and want some clarity. The last thing you want is to start building a project and then 5 years down the line, you're hauled in for an enforcement action. But it actually isn't good for the SEC either. We have a lot of things that we're responsible for, and we shouldn't be spending we're not spending all, but we shouldn't be spending so many of our enforcement resources in this area. And we would do better for everyone if we were able to identify some clear lines so that it would be easier for us and for other people to identify than the people who didn't want to comply with the rules. Now it's much more difficult for people to discern the good from the bad because there's this regulatory lack of clarity.
Okay, I'll give you one example of something that has been on people's radar. So during 2021, there into 2022, the tokenized asset market was booming. And so a lot of people were issuing tokens, not knowing that they were securities, and then retroactively getting penalized for it now. I think some people complained that it was unfair because at the time the regulations were not as clear as they have become now. How do you respond to that claim that that particular instance was maybe not handled fairly?
Well, I would argue first that I don't think the rules are clear now. I think there are a lot of questions about what the rules are. So we haven't solved that problem yet. With respect to your main question, I think that's exactly why I have been critical of my agency's approach to this, because we have watched what goes on in the industry. We know what's happening. We can see areas where it might be helpful for us to come in and provide some guidance. We've said to a lot of people, come in and register. And when people have tried to come in to work with us to register, they've really ended up in a loop of conversations with us, but those conversations almost never produce an outcome that is actually a registration outcome. And so that's just not an effective way to run a regulatory program. And so, yeah, I mean, I sympathize with people who are feeling that they're not getting the clarity they need to get in order to build businesses. And I think that's what's led a lot of people to either say, you know what, I'm going to just not spend my time working on crypto. I'm going to go outside the US, or it's just not worth the effort. So that's what makes me sad. Some people are waiting in hopes that will provide clarity.
So the days of people issuing $500,000 worth of NFTs of JPEGs of rocks, are those days coming back, Commissioner Peirce?
Well, I mean, the NFT question is a very interesting one because NFTs mean a lot of different things to a lot of different people. And I think that is one of the areas where if we were to provide some clear guidelines, we could see some pretty interesting applications of NFTs. Again, I'm a regulator, so I'm not going to speculate on what's going to succeed, not in the marketplace, but the NFTs do offer the ability for people to interact with fans or to sell art in a way that enables them to profit from their work. And so there are some of these applications that I really would like people to be able to try. And I hate to think that it's the securities laws that's preventing them from doing that. Now, obviously, you can design an NFT so that it's a security also, but I think we don't do anyone any favors by saying all of these NFTs belong in the SEC's jurisdiction. I just don't think that's correct.
This next question pertains to the sentiment overall of governance under Chair Gensler. Take a look at my screen here. This is from a hearing from another fellow commissioner of the SEC. I'll just like to play you this clip, please. It's about a minute long.
And you said, if I wrote here, you said under Chair Gensler, it was below average. Why did you use that word below average?
For a number of years, I worked on rulemakings. We spent a lot of time preparing, for instance, very detailed summaries of the public comment file. We spent a lot of time and effort on decision trees of all the points that were raised in the comment file, what decisions they would be, what evidence do we have, and what were the course of recommendations. I find today, now, with a little more than 2 years as a commissioner, I see none of that work product being presented to the or at least for my review in how I think about the decisions that need to be made at the commission level. And in fact, on one early recollection I have when I became a commissioner is I was actually told by the staff, well, we haven't prepared a summary, but you can go read the public comment files on the SEC website.
I'd like you to please respond to that. Do you share Commissioner Ueda's sentiments?
Yeah, I think what Commissioner Ueda was raising was the fact that we have done a lot in the rulemaking department, as I said, not with respect to crypto so much, but on other areas over the last several years. And what has tended to happen is that we've gone out with these very broad proposals of what we want to do. And that's generated a flurry of comment letters responding to these very broad proposals. And then when we move to adoption, we've tended to adopt a narrower rule. But the consequence of that is that you end up with people not being able to really focus on the points that you as a regulator need to hear about. And so I think there are better ways for us to go about our rulemaking, to be more targeted and thinking about what the problem is we're trying to solve, and then in coming up with a range of solutions to those problems, and then inviting people to weigh in. In fact, I think it makes sense to have people weigh in on telling us where they think the problems are, where we should be spending our time. So having a much more interactive rulemaking process, I think, would be very beneficial for us and for the public.
Former President Donald Trump has floated the idea of nominating you, among some other people, as a potential for the SEC chair should he win the election in November.
We're going to let it grow. We're going to let it grow. On day one, I will fire Gary Gensler and appoint a SEC chairman.
If you were SEC chair, how would you change things in terms of governance, in terms of providing clarity for not just cryptos, but other asset classes as well? Basically, what would change?
Yeah, and I mean, I think that things can change tomorrow or today. It doesn't require a new chairman to change how we do things. Really, we need to just go back to the point that I said, which is thinking about where are the problems that fall within the jurisdiction we actually regulate, then identify potential solutions to those problems, and bearing in mind that markets often figure out solutions to problems without the regulator coming in. So being willing to defer to market solutions where those are available, and then crafting solutions that make sense, that take into account the costs as well as the benefits, and also thinking about how in a few years you're going to go back and look to see whether your rule is actually working the way you intended it to work. Because if it's not working, you got to go back to the drawing board again. And so I think these are just very common sense things. And another piece where I think we've tripped up in recent years is it's not only in the crypto area, but in some other areas, we've attempted to expand our jurisdiction, whether it's through enforcement actions or through rulemakings. And it's really important as a regulator that we stick within the bounds of what Congress told us to do. And so I think that that's again, good agency governance, and it's something that we can embrace anytime we want.
Specifically to the crypto industry, Commissioner Peirce, what can we expect in terms of new changes to current regulation that's probably currently in the works or expected to happen in 2025?
Well, again, I mean, we've been on this course of using enforcement as our primary regulatory tool, which is just, it's backwards. I mean, we're a regulatory agency that has an enforcement arm. Enforcement is very important, but it's not how you design a regulatory system. And so unless we decide to change that course, I don't really see that we're moving in a positive direction. Again, there have been a lot of statements about and invitations for people to come in and register, but unless you match those up with actual success stories, people aren't going to come in to talk to us, and that is not good for anyone.
Let's move on to another asset class now, which is penny stock listings. I'd like to read to you this article from the Financial Times dated September 25th. Basically, it says the SEC needs to take action over penny stock listings. So I'll just share my screen here. The trend is clear from early 2021 to the end of 2023. The number of penny stock companies listed on an exchange increased from less than a dozen to well over 500. In part, this may be explained by the lagging effect of the mini IPO boom that developed in late 2020 through 2021. It is generally accepted that a stock below $1 is often an indicator of financial stress and correlates with higher volatility and greater risk of losses for investors. Such issuers often have ambiguous business models and uncertain revenues and feature capital structures that allow insiders to convert their interests into common stock at a highly favorable rate. What is the SEC's plan to regulate this growing industry?
Well, I think it's first important to remember that the stock price of a company is not the end all and be all in terms of determining what's going on at that company. And so I think it's dangerous to try to just identify a group of penny stock issuers and say that there's only bad activity there. That's just not correct. What we do as an agency is we look at different segments of the market. We think about whether we need to address issues that are unique to that segment of the market. We did adopt some changes recently that affected some of those not listed companies, but other companies, 15C211 rules. Mm-hmm. And there have been suggestions. We got a petition for rulemaking that deals with penny stocks. So we consider the regulatory things, but some of the concerns that you outlined there in that statement you read are really concerns about just bad activity, people who are doing bad things. And for that, we have enforcement. And we bring many cases in this area. We have a very active group of people who are working on cases around microcap issuer conduct that violates the law. And so we can and do bring those cases.
Specifically, what kinds of enforcement actions would be required for a penny stock listing that, according to this article, a stock under $1, a lot of these stocks being issued highlight risk in the marketplace. Should we need more enforcement action if more of these stocks pop up, Commissioner?
Well, again, I don't think that we can take the measure of a company and the people behind that company through its stock price. I think you have to look at the facts and circumstances, and investors need to go in eyes wide open. They need to educate themselves about what they're investing in. But yeah, I mean, as I said, we're actively involved in policing bad conduct. But again, bad conduct can occur in companies that have higher stock prices also. So we are actively involved. It's an area where we look at cases where there are pump and dumps, for example. We bring a lot of cases in that area, and we are actively enforcing, and I think people can be confident in that, and people should also report bad activity to us when they see it. We have an active whistleblower program, and so this is an area where if people see bad conduct, should certainly send it our way.
speaking of bad conduct, I think a lot of people would like to understand how regulations would change to make crypto investing safer. In other words, how would the SEC prevent another FTX from happening?
Well, I think it's important, again, for people to be careful when they are spending their money, no matter what they're spending it on, to think carefully about whether they can afford to lose that money or not. So there's a piece of it that I think is just investor education. But people need to remember too that if you are investing through an entity that's outside the United States, that's outside of our jurisdiction. It may be outside of our jurisdiction, right? I mean, again, facts and circumstances matter, but so people need to take that into account. And then I think we at the SEC, as I said, if we wrote rules in this area, it would be easier for people to identify the bad actors and distinguish them from the good actors. And then another piece of this is that Congress has been thinking about a broader regulatory framework for crypto. And there have been a number of bills in Congress that would be quite comprehensive in their reach and would allocate regulatory responsibility, some to the SEC and some to other regulators. And so if Congress chooses to go down that road, we will have a piece of the job of policing those markets, but other regulators may also have a piece of that job.
Donald Trump said on the campaign trail that he wants to implement a Bitcoin strategic reserve if he were to win, and suppose this were to be implemented. How would the SEC play a role in helping this come to fruition?
Well, one of the things that I always emphasize as an SEC commissioner is that we need to stay within our jurisdictional lanes. And I think the outlines that I've seen of that plan would not involve the SEC.
I understand. What role does DeFi play in the future of banking? Now, I've spoken to some banking executives and I asked them why they currently don't have crypto offerings in their banks. I'm talking about traditional TradFi banks, not crypto asset managers. So, two-part question. Do you think the traditional banks, the Bank of Americas and the JP Morgans in the world, should be able to offer cryptos to retail customers? And if so, how would banking regulations change to facilitate this?
Well, again, staying inside my securities lane, I think it's very important that we, as the regulator, stick to our role, which is a merit-neutral role. We don't tell people what they should invest in, what they should buy, what they should not buy. And so I think we should be eager to let the market make those determinations. What we have done thus far is we have really discouraged established players from interacting with crypto. And so I would argue that it makes sense for us to put back our product neutral hat and allow these established players to make their own decisions about whether they want to be involved in serving customers who have an interest in crypto assets. And I think you'll see if we did that some of them would choose to be involved and some not. And this would allow for experimentation in a way that it hasn't been able to happen in the US. In other countries, established financial players have been able to do much more experimentation with ways in which this technology might assist them in carrying out the functions they carry out.
Final question I have for you, Commissioner. You are seen by the public as more pro-crypto, or at least less anti-crypto than some other members of the SEC. Why do you think, and correct me if I'm wrong, but if I'm making this assumption, but why do you think it's important for the nation to adopt more pro-crypto friendly stances and regulations?
Well, I think as I mentioned, it's not about being pro or anti-crypto. It's about saying I'm a regulator and my job is to regulate in a way that allows the markets to figure out what they want and what they don't want. And what my criticism has been is that we have taken a decidedly anti-crypto approach to the way we interpret our regulations. And I think that's completely wrong for us to do that. I think we need to go back to being neutral. And that means we do work with people and help them figure out how to accomplish what they're trying to accomplish while remaining consistent with our with our securities law objectives. And we could do that. It would not be hard for us to do. I mean, it would require some work, but it's not impossible. And I think that's the job of a regulator, to take new facts and circumstances and to work with people to figure out how they fit within the current framework, and then allow the public to make their own decisions about whether they want things or not. This is America, and people should be free to make their own choices. And so that's the world that I'm hoping that we can create with a more neutral regulatory framework.
Just follow up on that, and I'll let you go, Commissioner. The ECB recently, on October 12th, in a report, claimed that older Bitcoin holders are profiting at the expense of newer holders. Some interpretations of this report claim that they could use this to ban Bitcoin trading altogether. And I know that it is not the stance of any governmental body currently of the U.S. to ban Bitcoin, but hypothetically, if we were to get to that point, what evidence would you need to see to say, look, we need to ban this current asset class because it's causing a lot of harm in the financial sector?
Well, I'd like whoever is suggesting that in the United States to point me to an instance where we've done that in the past. And I don't see any authority for the SEC to ban products. And so I think that is one line of demarcation. That's not what, as I said, that's not what America is about. We're not about banning products. We're about getting people the information they need to make their own decisions. And I think that we as a government should remember that we serve the people, and part of serving the people is allowing them to make choices for themselves, even if they're different from choices we might make for ourselves.
All right. Thank you, Commissioner Peirce. I appreciate your time, and thank you for educating us.
Thank you, David.
Thank you for watching. Don't forget to like and subscribe.